Welcome back. While you were sleeping, China created a 460B chip company in one morning. And by the time the US market opened, memory stocks were down 5, 6, almost 11% across the board. The question everyone's asking right now, did CXMT's IPO just break the US memory trade? Or did the market hand us a discount we shouldn't ignore? Let's look at the bigger picture. I'm breaking this down the same way I break down every cross-market event. 3 layers. Macro first, then money flow, then price action. Because if you skip straight to the chart without understanding why capital is moving, you're just reading tea leaves. Layer 1. Macro. The DRAM supercycle thesis. Let me be clear about something before I show you any charts. Nothing changed in the fundamental story for DRAM this morning. Nothing. Here's what's still true. AI compute demand is still eating through HBM supply faster than Samsung, SK Hynix, and Micron can build it. When those 3 giants shift advanced capacity to HBM, which pays 5 to 8x more per wafer than standard DRAM, they create a supply vacuum in commodity memory. Standard DDR5, the stuff in your laptop, your phone, your server rack. That vacuum drives prices up. KeyBank called for another 15 to 20% DRAM price increase this quarter alone. NAND up 30 to 40%. This isn't a hypothesis. It's happening in real-time procurement contracts right now. Micron's most recent quarter, 4,146 bin revenue. Same period last year, $9.30b. They've locked in 22 BOF take-or-pay contracts with 16 strategic customers. Price floors built in. This company is printing money in the best memory cycle in a decade. So when I tell you Micron dropped 5% today and SanDisk dropped almost 11%, understand, those moves are not about earnings. They're about something else entirely. Which brings me to Layer 2. Layer 2. Money flow. This is where it gets interesting. CXMT, listed today at a valuation that works out to roughly 308 times trailing earnings at the IPO offer price. Micron, trading around 22 times. One of these prices in perfection. The other prices in skepticism. And here's what I think happened this morning. 2 different pools of capital looked at the same industry and reached completely different conclusions. The A-share IPO crowd doesn't overlap with the institutional holders of Micron and SanDisk. These are different investors, different time horizons, different currencies. The money that chased CXMT from 8.66 yuan to 49.50 yuan in minutes wasn't money that was sitting in Micron shares last Friday. It was dry powder that was never going to buy US memory stocks anyway. But, and this is important, the psychological spillover is real. When traders see headlines about a 460B memory giant being born, some percentage of them ask themselves, wait, does this change the oligopoly? 3 players becoming 4. Even if CXMT can't export cutting-edge chips to the US market yet, the mere existence of a 4th global DRAM source changes how people model long-term supply. And when models change, positions get adjusted. Sometimes quickly. Episodes ago, episode 65, I told you that easy money in semiconductors is behind us and that H2 is a stock picker's market. Well, CXMT just confirmed that call in a way I couldn't have predicted. The stock picker's question used to be, which semiconductor name do I own? Now it's, do I own semiconductors at all on a day like today? That's a meaningfully harder question. Layer 3. Price action. Let me read the actual charts. No opinions here. Just levels. Micron daily. Trading at 920.95. Down about 5%. Structure check. Long-term trend line at 708. Price is 30% above that. Not even close to being tested. Midterm trend at 909. Price is sitting just $12 above it. Short-term trend at 942. Price is below it. So the hierarchy here is clear. The shortest-term momentum has rolled over, but the intermediate and long-term structures are still intact. Resistance at 1084. Support way down at 448. That's a wide air gap. The stock has room to wiggle before anything structural breaks. Now the hourly, this one's more immediate. Price at 921.37. And look at this. The short-term trend line on the hourly is also 921.37. Price is sitting exactly on it. Not above, not below. On it. Bounced off a low of 894 earlier today. That's above the hourly support level at 883. Above the midterm trend at 951 is where the real resistance lives. So the setup is, price found a floor, crawled back to the short-term line, and now we find out if that line acts as support or becomes a ceiling. This is the level I'm watching, 921 on Micron hourly. If it holds, today was a shakeout. If it cracks, we revisit 883 fast. SanDisk daily. This one hurts to look at. Down 10.79%. 1437 on the close. The stock dropped through its short-term trend at 1613 and its midterm trend at 1649 in a single session. Only the long-term line at 1271 remains untested below. When a stock blows through 2 out of 3 trend lines in one day, that's not normal volatility. That's structural stress. Someone sold with size, and they didn't care about the chart levels when they did it. Stoc index, 11,819. Down 4.25%. Below its short-term trend at 23.1 and midterm at 12,414. Same pattern as Micron but less severe. The whole sector caught a bid to sell today. Western Digital. I threw this one in as a breath check. Down 6.89% at 520, sitting right on top of its midterm and short-term lines around 539, barely holding. Another push lower, and it joins SanDisk in broken structure territory. So here's my synthesis across all 4 names. Every single one of them is down. Every single one is below its short-term trend on the daily chart. 2 of them have cracked their midterm lines. None of them are anywhere near testing their long-term trends. Translation: short-term damage is real and broad. Intermediate-term damage is emerging but not universal. Long-term structure is completely untouched. Now let me address the risk nobody wants to talk about. CXMT adding meaningful DRAM capacity to the global market. That's a real thing. It's not imminent. We're probably looking at 2028 and beyond before their output moves the needle on worldwide supply. But the market doesn't wait for 2028 to arrive. It prices expectations. And the expectation of a 4th major DRAM supplier, even a China-locked one, changes the margin profile that analysts build into their 5-year models for Micron. That's a slower-burning risk, not today's driver, but it's there. If I had to stake a position based on everything I'm seeing right now, and this is not advice, this is framework thinking, I'd say this looks more like a shakeout than a breakdown. The long-term trends are the anchor. As long as those hold, today's move is noise wrapped in emotion. But I'm not buying the dip today. I'm not selling into it either. I'm watching the 9-21 level on Micron hourly. I'm watching whether SanDisk reclaims 1613. I'm letting price confirm the next move before I commit capital. Confirmation beats prediction. Always has. Always will. That's my read on the CXMT IPO ripple effect. 3 layers. 1 conclusion. Watch the long-term lines. They'll tell you whether this was an opportunity or a warning. If this kind of structured analysis helps you cut through the noise, subscribe. I publish every week. And drop a comment. Do you see CXMT as a threat to U.S. memory stocks or a validation of the entire sector? I want to hear your take.